I don't see things cooling off. I see the supply-demand imbalance still being very significant, and that's going to continue to put upward price pressure on rents. But you may see a cooling off of the major double-digit year-over-year increases. That was crazy. I mean, you can't sustain 20, 30, 40, 50% annual year-over-year rent increases. Markets just can't do that because incomes don't rise that much. Rents track with incomes. Incomes have gone up over the past couple of years, so rent should be tracking with that. George, in our markets, if we're seeing anywhere from 8 to 15% right now, I think it's healthy. In some cases, if I've got underpriced inventory, I'm going to want to get that up to what market rate is. I don't have that much underpriced or mispriced inventory. A lot of other people might. But in our buildings, I got to keep up with inflation. I have to meet my debt service coverage ratios for my lender. I have to be able to pay property taxes in my towns. And by the way, property taxes are the single biggest expense a property owner has. So when property taxes go up, rents have to rise in a ratio that's similar, because otherwise you're not going to be able to sustain the business of operating that building. Every building is a business, right? Think of a strip mall where you've got all these different commercial tenants lined up, and you look at buildings, every building has its own economic profile. They're businesses. They need to make money, they need to pay bills, and they need to pay their property taxes. These towns got to get a hold of budgets and deal with inflationary measures themselves, because taxes are going up everywhere, and the property owners have to pay for that via rent increases. So